Bags. What's up, gang? I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough problem on how to properly journalize using the all clear system. The all clear system is my foolproof way that I designed for you to be able to journalize in no time. So if you're unfamiliar with the all clear system, I dropped a link to a video that'll get you up to speed. So with that being said, let's get it. So, tells us to journalize the transactions for Lawrence Engineering, including an explanation, use the following accounts, yada yada yada, blah blah blah, record debits first, credits second, and include an explanation for the table. So we have a bunch of transactions, and we're going to take these transactions and rock and roll. So before we do that, let's discuss the all clear system quickly. The all clear system basically has two gains, the all gain and the clear gain. Within the all gain, it consists of several accounts. What accounts? Assets, withdrawal, and expense accounts. The clear gain also includes capital accounts, which is stockholders' equity, liability, and revenue accounts. If an account is in the all gain, we're going to always increase it on the debit side, thus decreasing it on the credit side. Likewise, if the account is in the clear gain, we're going to always increase it on the credit side, obviously decreasing it with the debit. So, without any further ado, let's attack the first problem. So it tells us on July 2nd, we received $14,000 contribution from Brett Lawrence in exchange for common stock. Half of that is BS. We just want the keywords. The keywords is receive $14,000 and common stock. $14,000 obviously is cash. Cash is an asset, which makes it belong in the all gain. And what is happening? We're receiving the cash, which means that it is increasing in the company. Thus, since it's in the all gain, we're gonna debit cash. What about common stock? We, as the company, issue shares of stock in order to receive the cash. So now we have more shares outstanding, which means that our equity, common stock, particularly has increased. Since common stock is a part of stockholders' equity, and stockholders' equity is also known as capital, that brings it into the clear group. And since our shares are now increased, we are going to have to credit the common stock. So what we're going to do is debit cash and credit common stock for $14,000. And we're going to look at explanation, and obviously we issued common stock for cash. So we're going to check the answer. Bags all day. Moving on. The next one tells us that we paid utilities expense of $370. Keywords paid and utilities expense. Now, I'm going to give you a tip, gang. Anytime you're reading a transaction and it tells you that the company has paid, the company is paid. If the company is paid, it's only one thing that can happen in that event. Cash is going down. And since cash is a part of the all gain, that means we must credit cash. So, anytime you see the word paid and the company is paid, you're always going to credit cash, gang. Don't forget that tip. Now, what did the company pay for? Well, the other key word is utility expense. Now, as accountants, we record expenses when they happen or incur. Since this particular expense just happened, we must put it on the books. We must increase the amount of expenses, particularly utility expenses, that we've incurred for the period. So our expenses are going up. Expenses are all in the all gain as well. And the only way to increase an expense in the all gain is by debit. Thus, we are going to debit utilities expense and we are going to credit cash for the $370. What about that explanation, gang? Well, obviously we paid on an expense, didn't we? Sounds about right. Check the answer. Excellent. Moving on. Now we purchase equipment on account. Keywords: equipment on account. Now, equipment is the freebie, right, gang? We know 9 times out of 10, if it's a keyword, it's gonna be that account that's affected. This is an example of that. Equipment. We know equipment is an asset. Which gang does that belong in? Clearly the all gang. And since equipment is coming into the business, we have to increase it. So how do we increase anything in the all game? We're going to debit equipment. Now, the other keyword tells us on account. Now, in your noggins at this particular level, you trying to chase the bag with accounting, when you see the word account, I want you to think of only two types of accounts that may possibly be affected. Either an accounts receivable or an accounts payable. They're different, but they're similar in the sense that something in the future has to occur. So, accounts receivables, we set up an account to receive cash in the future. Likewise, accounts payable, we set up an account to pay cash in the future. So in this particular situation, we purchase equipment. So of the two accounts, which one are we going to deal with? Obviously, the accounts payable. Accounts payable happens to be a liability, last name payable. Anything with a payable in the last name will be a liability. And it happens to be a part of the clear gain. So since accounts payable is a part of the clear gain, and we know that we have purchased equipment on our account, our liabilities are going up. And the only way to make a liability go up in a clear gain, you have to credit it. Therefore, we're going to debit equipment, and we're going to credit accounts payable gain for $1,600. And the explanation will be, we basically bought equipment on account, right? So we're going to check that answer. Bags all day. Let's get it. Next, perform services for a client on account. What are the key words? Perform services and on account. Here we go again, gang. On account. Now, let's identify the first batch. We perform services. Now, why is that a key word? Because we know that we have a particular account that is always affected whenever you provide a service or sell a product. And that account happens to be called revenue. That's how companies generate their revenues, by providing a service or sell a product. So the fact that we have a keyword saying that we perform the service, we know that our revenues are increasing. Next, we just have to realize what gang it belongs in. And we already know where the revenues belong. They are part of the clear gain, which means that if it's increasing, we have to credit our service revenues. Now let's focus on that account gain. Which one are we dealing with? Our account payable or receivable if we just finished providing a service? Clearly, you know we are dealing with that account receivable. Why? Because we have set up an account to receive cash in the future. Why are we setting up an account to receive cash in the future? Because we just provided a service and ain't nothing free in life. So, since account receivable happens to be an asset, it's in the all gain, we're going to debit that because we're increasing it. So we're going to debit accounts receivable, and we are going to credit service revenue for the $2,900. And obviously, we provided a service on account. So we're going to click that, check the answer, bags all day. Moving on. This time we borrowed $7,100 cash, signing the notes payable. What's the key words? Borrow cash, sign a note, payable, right? So what happens in life whenever you borrow cash? Cash is doing what? Going up. So we know cash is a part of the all gain, and we already know how to increase anything in the all gain. We're going to debit cash. But what about the note payable? We borrowed by signing a note. So we have now introduced the note into the company. Last name is a payable, which signifies that it's a liability. So we borrow money, thus increasing our liabilities, particularly note payable. Now, what gain does note payable belong in? The clear gain. And what is happening? It's increasing. So how do you increase anything in the clear gain? You credit it. So we're going to debit cash, and we're going to credit notes payable for the $7,100. And our explanation will be that we borrow cash by signing a note. Check our answers. Bags all day. I could almost do a bags all day dance. We got to come up with a bags all day dance. That's what I'm feeling. This time we had cash dividends of $200 that were paid to a stockholder. Keywords, cash dividends, and paid. Now, if the company is paid, you always credit cash. because cash is an asset and that's the only way you can pay something. What about dividends? Dividends by definition is a withdrawal of income to the shareholders. Therefore, that's why we consider it a withdrawal. And since it's a withdrawal, it has to be a part of the all gain. And since dividends went up, we have declared or given more dividends. How do we increase our dividends account? All gain tells us to do it with a debit. So we're going to debit dividends, and we are going to credit cash for the 200. We need an explanation, and obviously we paid cash dividends. Check them answer, boom. This time we purchased office supplies for $800 in paid cash. Keywords, paid cash for office supplies, right? So we bought office supplies with cash. Office supplies happens to be an asset, which makes it a part of the all gain. It is going up because it's going into the business. So we're going to debit office supplies. We already know the keyword paid, and since the company paid, we have to credit cash. We're going to keep it easy, gang. And our explanation will be simply buying office supplies with cash. Bang! Next, paid the liability from July 5th. It's keyword, paid liability July 5th. So I guess in this one, we have to scroll down or take a look at what liability was paid on the 5th. So we see here that we purchased equipment on account. So therefore it was an accounts payable of $1,600 on July 5th. Very well. So now it's the 27th and we paid on that accounts payable. Well, keyword is paid, so cash is going down. Cash is a part of the all gain, so we're going to credit cash. And it's a liability accounts payable, and since it's a liability, it is in the clear gain. And clear gains have to go down with a debit. Now remember, gang, anytime you pay on a liability or a bill, that liability has to go down. You pay on an account, it goes down. You collect on an account, it also goes down. So we're gonna debit accounts payable for $1,600, and we're gonna credit cash for the $1,600. And the explanation is simply telling us to pay on account. Check the answer. We are rolling. So there you have it, gang. An easy walkthrough problem that summarizes how to properly use the all clear system, that could demystify how do you actually debit or credit or transaction analysis for the journal entries. Hopefully all of this makes sense and it can help you chase the bag even closer with accounting. I'm Dr. Who, and it's my humble pleasure to have you guys here to spend your time with me. And if everything is clicking in that brain towards this information, don't forget to like, subscribe, and share the channel with your friends so they can chase the bag as well. As always, gang, see you soon. Bags.